Hello, everyone. Welcome back to my weekend series dedicated to price action based technical analysis. Today, we are revisiting the XAUUSD chart where last week's trading activity was more of a choppy market condition. Fortunately, things picked up in the later part of the week, helping us recover the losses incurred and secured additional profits on top of it. I applaud those who remain steadfast in their analytical approach. Looking ahead, the uncertainty around the Fed's interest rate cut timeline for 2024, coupled with strong US economic data, kept the market in a range-bound state. The Fed's signal of a strong Q1 growth and rising wage pressures suggest that the rate cuts might be delayed, and currently the market participants appear to have shifted the heart of a cut from March to May. Now, the upcoming CPI data next week will be crucial in determining the timing of any easing cycle, and if it justifies a delay, we might see further downside in gold prices. Given this development, let's strategize our approach for navigating the gold market in the upcoming week. So join me as we analyze the current market structure from both technical and fundamental perspective, utilizing tools like the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for the new week. Before we proceed, it's important to note that this presentation is for educational purposes only and should not be considered financial advice. While our goal is to enhance your understanding of price action analysis, always exercise caution and seek guidance from a financial advisor before making any investment decisions. With the groundwork laid, let's dive right into the business. As usual, our analysis will start from the daily time frame, which of course we are all familiar with, especially for those of you who have been with me since the beginning of this year. And after taking into consideration the nature of price action since the month of October, November, thereabout, it was evident that the current market structure was very, very bullish. And to emphasize this, we had the pivot lows here marked out, connected them, and we have this beautiful ascending trend line to work with ahead of the new week. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying this asset. In addition to this trend line is going to be our key level for this week, which I recently adjusted. And in fact, we are now having it around the $2,025 area. And of course, if you look into as far back as the month of November, you will see how this level had played a major role in determining the direction of price action. At some point, it was more of a selling niche, and at some point, participants were buying from that area. And in recent time, in the last couple of weeks, you will see price action has been trading around that area. And in fact, it shows that sellers are finding it difficult to break through that area. Now, coupled with the fact that price action is trading above the ascending trend line, the question going into the new week is, will price remain above these structures to further emphasize strengths of buyers in the market to push price to the upside, or are we likely going to be having a situation where both structures will be broken to the downside to incite a sell-off in the coming week? Now, to help us strategically position ourselves for the next move, have been able to identify a simple trading setup on our 4 hours time frame, which we will be using to guide our decisions for the coming week. But before we go into that detail, it is very, very important that we keep tabs with the fundamental factors that is likely going to be influencing the market sentiment in the coming week. And by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on the next potential move. And of course, right here on the economic calendar for the new week, and of course based on the asset we are looking at, we shall be focusing on high impactful event from the United States economic docket. Now, the first impactful event, which is one event everyone is looking forward to, is coming up on Tuesday, February 13th, and that is the Consumer Price Index. This is a data that measures, that examines the average change in prices paid by consumers for goods and services during the previous month. A higher than expected CPI can lead to concerns about inflation, impacting market sentiment as it may prompt expectations of tighter monetary policy to control rising prices. Then fast forward to Thursday, February 15th, we have the retail sales data, which is also considered as a key economic indicator that measures the total receipts of retail stores, representing consumer spending. Its impact on market sentiment is significant as it provides insight into the health of the economy and consumer confidence, hereby influencing expectations about future economic growth. Now, on Friday, February 16th, we have the Producer Price Index, excluding food and energy. This data here measures the average change over time in the selling prices received by domestic producers, excluding, of course, the volatile food and energy sector. A higher than expected reading suggests potential inflationary pressure impacting market sentiment by signaling changes in production cost and potential effect on consumer prices. Now, finally, on that same day, we will be looking forward to the publication from the University of Michigan, and that is the Consumer Sentiment Index. Now, this index gauges the prevailing sentiment and confidence level among consumers, providing valuable insight into potential shift in economic conditions. So these are the high impactful events that we will definitely be looking forward to this week. And of course, as technical traders, we do understand that the anticipation of this event alone has a way of influencing the market sentiment, which of course will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where I was able to take into consideration the nature of price action in the last 2 to 3 weeks, and this was what I was able to come up with. Now, in the last couple of weeks, it is quite clear that though the market has been choppy and range bound, we can see the tendencies of price action finding higher lows, giving us a sign that buyers are trying as much as possible to maintain their stance, and as a result of this, we have an ascending trend line to work with. And one interesting thing about this ascending trend line is the fact that it also shares a beautiful confluence with that key level we identified at the $2,025 area on the daily time frame. Now, with the situation we have here and considering where price action closed during the course of last week's trading session, you would agree with me that we are at a crucial juncture where, depending on how price reacts to both the key level at the 2025 and the ascending trend line, would determine if we are going to be buying or selling this asset this week. Now, our center of focus for the new week is basically around the $2,025 area, where during the early hours of the week, depending on how market participants react to the structure, will determine if we are going to be buying or selling. Now, if price remains above both the ascending trend line and that key level at the 2025, which of course is sitting right above that demand zone around the 2015 and 2025 area, it will make quite a lot of sense for us to look out for patterns and structures that support the idea of buying this asset. However, if market conditions support selling pressure in this market and price drops and stays below both the key level and the ascending trend line, then we will definitely be looking out for patterns and structures that support the idea of selling this asset. So this is my simple view on this asset for the upcoming week. Trust me, I will be with you in the comment section of this video on Monday morning after monitoring how participants in the market will be reacting to that confluence. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you'll always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.